Howdy, everybody. Welcome to Liberty Call. Today is, what is today? Today is Thursday, February 13th, 2025. Hope you're having a fantastical day out there in the interwebs. It is, well, sunny here today, but it is very, very cold. I think the high today was, we might have got up into the 20s or maybe 30. I don't know. But it is quite chilly. The sun is out, which is nice. So as soon as I'm done down here in my dungeon of an office, I'm gonna go sit in the sun up in the den and soak up some vitamin D. So anyways, markets are climbing as investors digested the latest inflation data and Trump new tariff proposals. The S&P 500 and NASDAQ are both up, led by tech giants Nvidia and Apple. The producer price index came in hotter than expected. There's a shock, but some signs suggest inflation may be cooling. Meanwhile, Chevron is slashing up to 20% of its workforce. The NYSE is launching a new exchange in Texas, and Trump is pushing for reciprocal tariffs on countries that tax U.S. imports. So before we break it all down, I need some help from you. Could you give me some thumbs up, a like, share, subscribe, and follow, and press the notification bell? All righty, let's hop into the markets. See here. Dow Jones was up 0.77%, 342 points, closed at 44,711. S&P 500 up 1.03%, 62 points, closed at 6114. NASDAQ up 1.5%, 295 points, closed at 19,945. The VIX was down 5.03% today. It's at 1509. Canada was up 0.53%, Brazil up 0.35%, and Mexico up 0.26%. In Europe, Germany was up 2.09%, the UK down 0.49%, France up 1.52, Netherlands up 0.42, Spain up 0.19, Italy up 1% flat, Switzerland up 1.87, and Portugal up 0.89. Russian exchanges both in the green today, by a lot. MOEX up 5.88%, and the RTSI up 9.39. And the overnight markets, the Nikkei in Japan was up 1.26, Australia up 0.06, New Zealand down 0.16 when it closed on the 12th. In China, the Shanghai was down 0.42, Shenzhen Component down 0.77, China A50 up 0.47, DJ Shanghai down 0.4, Hang Seng down 0.2, and the Taiwan weighted up 0.47%. All right, good stuff. Well, let's jump into our market recap. S&P 500 climbs as Nvidia leads tech higher. All right, the S&P 500 climbed Thursday, fueled by Nvidia's surge, even as inflation concerns remained in focus following another hotter than expected inflation report. Nvidia jumped over 3% after Hewlett-Packard Enterprise shipped its first Blackwell AI computing system, boosting optimism despite concerns over the chipmaker's production delays. Nvidia's earnings report on February 26 will be a key market event. The producer price index increased by 0.4% in January, above the 0.3% estimate, with annual growth reaching 3.5%. This follows Wednesday's hot CPI report, reinforcing concerns about persistent inflation. The Federal Reserve has maintained a cautious stance, with Chair Jerome Powell emphasizing the need for clear signs of cooling inflation before considering further rate cuts. President Donald Trump signed 25% tariffs on steel and aluminum imports, warning of additional reciprocal tariffs. Analysts caution that tariffs could elevate inflation as U.S. importers will bear the costs. In the earnings roundup, let's see here. Cisco rose 2% on increased revenue guidance driven by AI demand. Robinhood soared 11% after reporting record Q4 revenue. Dutch Brothers skyrocketed 27%, beating earnings expectations. Crocs surged 21% on strong North American and China demand. Reddit slumped 7% after disappointing user growth. Well, anyone who's ever been on Reddit knows that the people on there are idiots. I mean, I like Reddit for some of the subs that are, like guns and, libertarianism and things like that. But you get into the news and things, it's full of a bunch of leftist wackos. John Deere fell 1% after reporting a 50% drop in net income due to inventory struggles. And finishing up, market sentiment improved after Trump revealed that both Putin and Zelensky expressed interest in ending the Ukraine war. Talks are expected to begin soon, with Ukraine potentially dropping its NATO bid, probably a very smart move, a key point of tension with Russia. Despite inflation concerns, optimism in tech earnings and geopolitical stability kept markets afloat. Yeah, I mean, I know I'm a big, poo-pooer on the whole, us being involved in the Russia-Ukraine issues. I mean, part of it is that we created this problem back in 2014 with the Maidan coup, and people like Victoria Nuland. I mean, there was that leaked phone call where she was saying, to hell with the EU. We're going to get yachts in here and do this and do that. And basically, we put in a puppet government, and then the Ruskies didn't really care for that. I mean, I don't think if the roles were reversed and the Ruskies were over in Mexico, farting around and doing stuff, in the states along our border, like Chihuahua and shoot, I can't remember the other ones, but if they were doing stuff there, having guided missiles and things like that, along the Rio Grande, I don't think we'd be real happy about it. And I think, we would do something about it too. So I can't exactly, U.S. meddling has really created this problem. So we'll just leave it at that. All right. Next up, we got some data. The January PPI report from First Trust. Mr. Andrew Opdyke put this report together. So let's dive through this. Inflation pressure showed no signs of easing in early 2025 as producer prices jumped 0.4% in January, following a 0.5% increase in December. This marks an acceleration in price growth, with annual producer inflation hitting 3.5%, up from recent lows and rising at a 4% annualized rate over the past 6 months. Energy and food-driven inflation. Diesel fuel prices surged 10.4%, leading the broader energy sector higher. Food prices climbed 1.1%, contributing to the overall increase. While food and energy prices are historically volatile, inflation remains broad-based, affecting multiple sectors. The core producer inflation picks up. Stripping out food and energy, core producer prices increased by 0.3% in January, bringing the 12-month rate to 3.6%, significantly higher than the 2% a year ago. Services sector inflation continued to rise, with transportation and warehousing services up 0.6% and other services categories up 0.4%. On the goods side, communication and related equipment saw a 1.2% increase. Further up the supply chain, immediate demand processed goods rose 1%, while unprocessed goods prices soared 5.5%, pointing to persistent cost pressures. All right. Well, with both consumer and producer prices rising sharply, the Federal Reserve is expected to maintain its wait-and-see approach before considering rate cuts. The M2 money supply, which surged in 2020 and 21, remains a key indicator to watch as it continues to decline from peak level. Actually, it's heading in a positive trend as of the last time I looked at it last week, but perhaps not quickly enough to curb inflation entirely. Job market stays resilient. Unemployment claims fell 7,000 to 213,000 last week. Continuing claims dropped 36,000 to 1.85 million, signaling continued job growth in February. Persistent inflation and a robust labor market data reinforced the Fed's cautious stance, making imminent rate cuts very unlikely. Yeah, I think from all the articles we've been covering here in recent weeks, they've been targeting June. Yeah, the June meeting on the 17th and 18th of June is what it looks like on my calendar. So maybe, there's a lot that's going to, that's 4 months from now. So a lot can happen between now and then as far as, things going on in the economy, what Elon and his buddies are doing with Doge as far as ripping apart the federal government, which, again, I'm totally happy about from a taxpayer perspective. I think the federal government has expanded far too much beyond its jurisdiction, which only has to do with defense, diplomacy with foreign countries, and ensuring a free trade zone between the states. Outside of that, what's the clause they always go to? The necessary and proper clause or whatever that, just gives them free reign to, legislate over everything that we do. So anyways. All right, last up, got an article from Zero Hedge, 12 facts about deindustrialization of America that will blow your mind, written by Michael Snyder of the Economic Collapse blog. So let's see what he had to say. All right, let's be real. America is losing its edge when it comes to making things. Once a global powerhouse in manufacturing, we've now outsourced so much production that our economy barely makes anything anymore. Instead, we just want to consume like crazy and rack up more debt. Sounds like a winning strategy. Not exactly. Back in the day, American manufacturing won wars, literally. Our ability to outpace Germany and Japan was a huge reason we won World War II. Fast forward to today, we've lost nearly 70,000 factories since 2000. Manufacturing made up 28% of our GDP in the 1950s. Now it's down to just 10.3%. Meanwhile, China is cranking out 4 times as many cars as we do. Trade deficits, debt, and a whole lot of imports. In 2024, our trade deficit with China hit a staggering $295 billion. We import more than 3 times more from China than we buy from us, or than they buy from us. Our biggest export, soybeans. Meanwhile, we're drowning in cheap Chinese goods. The real cost, Americans are struggling. 36 million people live in poverty. That's about 1 in 10 for those who are math challenged. Homelessness is at a record high. Food banks are stretched to the limit. And once thriving industrial towns like Gary, Indiana, and Youngstown, Ohio, look like ghost towns. So the economy is basically on life support. So instead of fixing the problem, we piled on debt. Our national debt is 36, or federal debt is 36 trillion, and total U.S. debt has soared past 101 trillion. I guess if you factor in all the future liabilities that we have. So, so what's the plan? We need to get back to making things, plain and simple. If we keep outsourcing everything and borrowing money to sustain our lifestyle, what kind of a future are we leaving behind? At this rate, we won't have an economy to pass on. So, all right, I wholeheartedly agree with that. All right, well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there, so give me a call. Glad to help. All right, well, I hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.